So the other day, ladies and gentlemen, they brought us a question of this nature, which is really a normal question, very easy question. But because in BDA, they expect you to type everything in Excel, so many students don't end up doing this kind of a question very nicely. Yeah. So this is how the question reads. We are told here XYZ Limited is considering 6 investment projects with the following details. So you can see project summary in shillings thousands, project 1 up to project 6. We have initial outlay. They've given us their net present values, except the net present value of project number 6. So additional information for project number 6, now they would expect us to compute the missing net present values. So they've given us here project 6 annual cash flows in shillings thousands before inflation. We can see sales in year 1 up to year 4. You can as well see costs from years 1 to year number 4. Project 6 cash flows are exclusive of inflation, sales income, it's 4% per year. Inflation for costs, it's 5%. Cost of capital is 10%. Capital available for investment is a whole 5 million. Project relationships, project 1, 3, 5, and 6 are independent. Those ones we can do them, even all of them at the same time because of what year? That independence. But projects 2 and 4, they are mutually exclusive. If they are mutually exclusive, it means that it is one of them at a time. There is no way you'll be able to put them up together because they are like day and night. They can't coexist. If it is project 2 that will be done, it has to be project 2 alone. It cannot be project 2 and the 4 because they are mutually exclusive. Divisibility, all projects are divisible. None can be delayed or what year or repeated. So requirement, they want us to calculate net present value of the project as 6, 3 marks, determine the optimum investment combination given the capital constraint, and then calculate the resulting net present value from the project above. So if you get this kind of a question, I so strongly believe that if you're doing it manually, you'll be able to knock it down like quite fast and get all the marks. But you see now BDA is not like that. BDA is about you being very organized and now doing this, the ability of you to do this in Excel. So ladies and gentlemen, then if I'm the one who got this kind of a question, how would have I tackled it? This is a straightforward question. So many students are failing in this BDA. So basically, they want us to give them the net present value of this. So that if I'm the one doing this, first of all, I'll come and give them this inflated, this inflated what year, inflated sales, and inflated cost. That will really be very important. Now, my good students, when we talk of most importantly here, I will be able to have, inflation. It's all about what here? 1 plus the rate, 1 plus the rate, the inflation rate. And I can see the inflation rate is here. So for sales, it's 4%. So basically 1 plus 4%. So I know that for sales, my good students, I will be using this 1.04. Where did I get 1.04 from? Yeah, because of that inflation, 1 plus R. So for sales, the adjustment factor will be that. And then for cost, I can see the inflation is 5%. So it is 1 plus that 5%, which will be 1.0 what here? 1.05, just like that. That will really assist me. All right, my good students. So then what then I need to come and do is to come and now mention here inflated sales and inflated cost. So we have here inflated sales, and then down here we have inflated cost. Inflated cost like that. Great. So remember, this will be for the first 4 years. Don't forget that. So we have our years. We're going to come and put our years here. We can put our years here. Yeah. So we have year 1, year 2, year 3. They are going up to year 4 only. All right. They are going up to year 4 only. Now, my good students, please listen and listen to me very well. When it comes to end of year 1, my students, please, before I start using this to do Excel to do my inflations, so it comes to year number 1, this is how these will look like. I should talk of 725. I can see the old one was 725, eh? So I should talk of 725. I say times 1 plus inflation. I say times 1.04. Yeah. When I come to year number 2, please be very, very careful. When I come to year number 2, I can see the figure here without inflation for year number 2 is 765. This is 765. But you see, this is without inflation. And because now we are looking at this thing, 765, 2 years down the line, so it will be times 1.04, but now this time around raised to power what here? To power 2, and so forth. And so forth. Can somebody in this case here, just for our records, I'll be doing this using Excel, but can somebody give me these 2 answers? What is this 725 inflated at the end of the first year? Can somebody just give me this answer? Just for our records, because I'll be doing it using Excel automatically. Just for our records. Just for our records, can somebody give me this figure? So for our records, I'm being told by somebody here that the first one will be 754. Just for our records. How about the second one? 765 times 1.04 raised to power 2. Just for the record. Just for the record, Candy is giving me 827. 827, just for the record. So somebody up there told me, Mwalimu, wait, we open our computers. Are they open now? Those computers open. These are past paper questions. I'll be able to tell you the sitting. These are past paper questions. I'll be able to tell you the sitting. To share the document. So then please, now that you have been able to pick up to where Mwalimu is, allow me to delete these 2 things here. And then allow me to first of all come here, Control B, to just have this being bold, Control B. Yeah, allow me to inflate my sales. Yes, please. So to inflate my sales, what I will do, I will come and say equals. Yeah. Then I pick the sales for year 1, this sales for year 1. And then I say times this inflationary factor for sales, which is 1.04. But see, this 1.04 is going to be constantly used throughout. It shall not change. And in business data analytics, in Excel, any number that does not change, ladies and gentlemen, we shall always block it. We shall always lock it. And to lock a number that will remain constant throughout, we normally go to our very top row. There is the F series row, like F1 all the way to F12. So there is one there called F4. F4 is the one that we shall always use to lock those particular constants, which will not be changing. All right, F4 is the one that we use to, lock all the constants. In some computers, for you to use F4, you simply go and click F4 where it is. In other computers like mine, I have to press FN, FN for function, which is quite close to control. So you say FN, and then you press F4. You're pressing them together. And then you'll be able to see the concept of the locking with these dollars like that. All right? And then because I'm inflating its compounding factor, I will come and say raised to. So I'll come and say raised to this number 1. I don't have to write 1 there because I would want this to move as I move this year 1, raised to year 1 like that. So once I do that, I'll be able to enter. And the very best way is to say control, enter. The very best way is to say control, enter. So that I'll be left with this one here, still downward here, still highlighted. And then once I've done that, I can now use the autofill handle. So you can come and use the autofill handle, the black one here. And then now you should be able to come here and scroll this like that. Up to the end of year 4. Up to the end of year 4 like that. So you can see our figure for year number 2. We said here, 827, like that, 754, like that. So the most important thing is for you to learn how Mwalimu is inflating, because you can't do a BDA exam without this concept of inflation. Down here we were told, if you remember very well, that a cost is going to inflate at 5%. 5% is the same as 0.05. And I was able to put down the inflationary factor of cost. So it will be 1 plus that R plus that 5%. That's how I got this 1.05. And then how do I squeeze this inflationary? You see the figures that we have here. These figures here, they are before inflation. Like this 145 is before inflation, and we want to inflate it using this factor 1.05. So there is no problem. Ladies and gentlemen, what I need to do is quite an easy thing. This is what I need to do. I simply need to come here. I say equals. Remember in Excel, you must always start with equals. You pick the cost that you would want to inflate. The cost that you would want to inflate is this 145. And then I say times. This 145 is going to change. Next day you can see it's a different day, it's 168. So I can't lock this. So I'll come and say times. Now, ladies and gentlemen, the inflation factor for cost is this 1.05. That 1.05. And this 1.05 across the row, it's going to remain the same. And because it's going to remain the same, then we must lock it up. We must do what we call dollarization. You must dollarize these. So come and dollarize it, ladies and gentlemen. So you'll come here, and then straight away you say function F4 like that. You can see the dollars. And then I'll be able to come and say, ladies and gentlemen, raised to. We raise these two to what year? We raise these to 1. Year 1 at the end of year 1, at the end of year 2. But again, there is something very important. Ladies and gentlemen, I would want all these costs, because of the name cost that I'll be subtracting, I would want all these costs here to have a negative ahead of them, in front of them. So in this case, I'll be able to come here just immediately after equals before this cell. Then I say minus there. And then I say control enter. You can see the negative has come. And then now for the other cells, I'm using the autofill. The autofill handle is here. I'll be able to come and pull like that. Ladies and gentlemen, I'm sorted out. I am sorted out big time. So I would want to know whether there is even a single student who has been able to reach where Mwalimu has reached. Any student who has been able to reach where Mwalimu has reached? Please don't fear me. We have to work this out together, all of us. Especially that aspect of inflating. You must know how to inflate. And you must know how to share your screen. Somebody please share your screen with us. Yes, I'll be able to repeat. Lincoln, yeah. Lincoln. Remember, we shall be able to give a presents even today. We must always give presents. We must always give presents. Always we shall give presents. Always. Yeah, already this ninja has an answer and he would want to do this. I didn't get it. Okay, we shall be able to repeat. All right. So you can see what he's doing there is trying to inflate his sales. And the inflation rate, you can see that it has been given to us that sales is supposed to increase at 4% per year. Great. Yeah. Javan, that's a very, very good question. There are times in this case here, they will give you the figures being the same every year, and there are times they'll give you the figures being different. It happens here. You can see what he's doing there. He's inflating. Raise to that to 1. Yeah, so this ninja should be able to get my today's present. So then allow me to repeat this pretty fast. Allow me to repeat this pretty fast. So remember, what are we doing? Basically, we are using that high school formula. The high school formula which says that inflation is all about compound interest. That amount will be equal to principal into 1 plus R, 1 plus R, you close bracket, then you come and raise these, to N number of years. That is the formula we are using. Remember, this is about inflation. Inflation is about increasing. So then if you're increasing, then it has to be positive N. It cannot be negative N. When you say negative N, you are discounting. So this is inflationary. All right. Then what have we done? We've been told for sales, the rate of inflation for sales in this case here is 4%. So then the 1 plus R is what we did here. We did 1 plus R here. So we got 1 plus 0.044 sales. So we got 1.04. And then the cost, you can see the inflation for cost is 5%. So we got 1.05. And then once we got that, ladies and gentlemen, to be able to get now inflation amounts for the other, so I came and wrote down here 1, 2, 3, 4. We wrote like that. And then we came, ladies and gentlemen, here and looked for what here? We looked for this inflated what here? We looked for these inflated sales. So inflated sales. So this is what we did to get inflated sales. So inflated sales. I'm just repeating here. So my inflated sales, ladies and gentlemen, what do? I'm taking my principal. The very first figure here for sales was 725. Then I come and say times, because it is principal, into 1 plus R. Fortunately, the 1 plus R, already we have done it. We have it here for sales. It is 1.04, and this 1.04 is going to remain constant throughout. If it's going to remain constant throughout, then we must dollarize it. There are students who are not able to understand this aspect of dollarization. So normally what we do, we tell them to come here like before 12, before the number. Say shift 4, you put $1 there. And also before G, you say shift, you put $1 there. But the very best, ladies and gentlemen, is simply to come here. It's very easy. The very best, ladies and gentlemen, it's very easy. So you've said it is this 725 times this 1.04 that we shall want to dollarize throughout. So then what I need to do is to come here, my good students, and then straight away to dollarize it permanently easily, simply say function together with the F4. Function together with the F4. You're holding both of them. 2 fingers. Function with the F4 like that. All right. So then we shall be able to come and say raised to shift 6, raised to the year. End of year 1, end of year 2. And then I shall be able to say control, enter. So once I get that, I don't have to do this. I can even do all the workings here. Like I can come here and say inflated. I can come here and say inflated cost. So inflated cost, ladies and gentlemen, what do I have for inflated cost? So for inflated cost, I'm saying equals. I must always begin with equals. I pick the cost for year 1. And then I say times the inflationary factor for cost, which is 1.05. This has to be locked and fully locked for that matter. So in this case here, function together with the F4. There are some good computers that you only press F4 alone. And then you come under, ladies and gentlemen, shift number 6 to raise. Shift number 6 to raise. Shift number 6 to raise like that. So I'm raising this to the first year, end of the first year. And please don't lock G18. Don't lock this, because when we move to the next cell, we can see it is moving from 1 to 2. So this can never be locked. So control enter. And then now I can come, ladies and gentlemen. Sorry, this one here, remember, you have to put a negative. This one here, remember, you must come and put what here? You must come and put a negative before it. Why are you putting a negative before it? Because it's a cost. Because it is a cost. It is a cost. So put a negative here. After equals before, yeah, put a negative there. So in this case here, control enter. So then once you have that, now you can come here, highlight the two cells, and then you can tell this thing here autofill to the right, up to number 4, like that. So you can see we have everything perfectly done. Now what you need to do is to come here and give us our profits. And these profits here will be our cash flows. Why? Because in this question, we don't have any tax. Remember what we said, in the absence of taxation, your profits will be equal to cash flow. So then come here, my good students, and highlight everything. Yeah, you highlight like that. Yeah, once you highlight like that, you simply say alt equals, and you have all the answers. Alt, A-L-T, near the windows, alt equals, and you have all the answers. Can somebody in this case here confirm whether now they've been able to reach where Mwalimu has reached? Anybody who can confirm they have been able to reach? Don't fear anything. Yeah. You shall never fear anything. These things are very, very easy. And please remember that for your BDA, we are the #1 college in East Africa of BDA. We always take, on average, 700 students to exams every semester, and those students study with us online. And if you'd want to study with us physically, you basically come to our Commonwealth. We are at Commonwealth, which is right opposite Galitos in Nairobi, along Moi Avenue. When you come to Galitos, you'll be able to see my face all over there. We have done big billboards all over there. But generally, if you would want directions and, of course, even study with us online or physically, please call our number 0793 555 000. 0793 555 000. Is there anybody who is saying, Mwalimu, repeat? Let me just check. I shall repeat as many times as possible for everybody. Yeah. So CIFA, remember, we call it FMDA. 80% of your syllabus is similar to what we have in BDA. So young, you shall study with us up to the very last month. That's when we get to separate you. Otherwise, you're at home. Like what I'm doing here is a CIFA question. CIFA or BDA question, similar. Look at your syllabus. I'll be able to read the syllabus for you when I finish here. All right, ladies and gentlemen. No. I can see a ninja there who wants later on to come and do CIFA. So he's asking whether once you do this BDA, shall you get FMD? If I was the CEO at CASNEB, I would allow this. But I know them, they'll be able to say that they don't exempt students from the advanced level. That I know. CFA, I will be able to talk about these courses after I clear this session. Remember, this session is a BDA session. Yeah, Lincoln is here already. So somebody is getting a slightly different figure, 601, 761. Let me just check these ones. Vis-a-vis mine, 601, 642. Did you use 5%? I don't know, because 601 and 602, that's quite different. Then I can see your numbers. I can see your numbers are moving far away from mine as you progress. Because like here I have 605. Kevin, check what you used in this case here. Or past papers, we have them. Past papers, we have them. I'll be able to share the past papers with you. Yeah. So now, ladies and gentlemen, once you've been able to get that really, what you need to do, that gentleman must have used 104 or something, eh? So once you have gotten, in this case here, the cash flows, now we need to come and discount them. Is there anybody who remembers the formula of discounting? First of all, the cash flows that we see here are different. These are irregular cash flows. So for irregular cash flows to discount them, we shall use PVIF. So is there somebody who remembers the PVIF formula? Is there anybody who is able to remember the PVIF formula, present value interest factor formula? Write it down there. PVIF formula. Anybody who is able to remember the PVIF formula? Anybody who is able to remember the PVIF formula? They must have forgotten PVIF. They must have forgotten PVIF. Remember, ladies and gentlemen, that PVIF, present value interest factor, we normally talk over into brackets, 1 plus R, 1 plus R, close brackets, raised to, so shift 6, raised to negative n, because you're discounting the figures reduce. So remember, the very best, always do these 1 plus R separately, eh? Yeah, yeah, do the 1 plus R separately. So we have here our 1 plus R, our 1 plus R, ladies and gentlemen, our 1 plus R, ladies and gentlemen. Remember, our cost of capital has been provided to us. They've told us that our cost of, they told us somewhere, oh yes, they told us somewhere. There is a place they told us. The cost of capital is 10% here. Cost of capital is this 10%. Is 10%. So you see that is 1 plus 10%. Eh? So this is 1.1. Not only you can just do it separately and write it as 1.1 like that. And then come now here. Oh yeah. So I will say equals, I pick this 1.1 that I've been able to do separately. That 1.1 is going to remain constant throughout. And the constant factor, like this geopolitical politics that you're seeing around here, the constant factor is America, superpower. So anything that is constant, respect it by all rising it. So in this case here, function F4 like that. And this now I'm going to raise these. So shift 6, I raise this to negative. So don't, you see this is the end of 1, end of year 1. But don't say raise to negative 1. I would want this to be a moving formula. So I would want to come and fix it on this one here, raise to negative 1. And you see this cell cannot be dollarized because next when I move it is going to be 2. So in this case here, control enter. So once I can limit this, I can limit this to 4. Yeah, four decimal places. So I have my PVIF there. So then once I have this PVIF, ladies and gentlemen, I can come and autofill so nicely up to year number 4. You autofill so nicely like that. And then now you are able to have then straight away the discounted cash flows. DCFs, discounted cash flows, what do? It's pretty easy. So I will come and say equals. I take my cash flow here. I say times my PVIF. There's nothing I'm locking here because these are moving targets. When I move here, the numbers are going to be different, like that. All of them are moving targets. What I need to do is to come and control my ball. You control the ball. So control enter. And then I should be able to come and just reduce this here. Don't have too many numbers. 4 decimal places are very nice. So then come here and autofill. So you autofill like that. Yeah. And then now remember, you can come here, ladies and gentlemen, at the end and talk about total discounted cash flows. You come here. So if you want, you can use the sum or you simply say alt equals. When you say alt equals, it's able to pick alt equals. Then you enter like that. You enter like that. And then don't forget, we have our IO. Don't forget that we have our IO. Do you know the meaning of the word IO? Do you know the meaning of the word IO? IO is initial outlay. Is there somebody who is able to remind us what the initial outlay was? Anybody who is able to remind us what the initial outlay was? Oh, yes, for project 6, they gave us. They gave us for project 6, they gave us the initial outlay. How much? It is somewhere there. They told us the initial outlay, how much do we need to be able to build up? Yeah, for project 6, you can see the initial outlay for project 6 is 1,500 in thousands like that. Our figures are also in thousands. So we are so happy. Our initial outlay is here. Our initial outlay is 1,500 like that. Then, ladies and gentlemen, remember, because it's a cost, it is always important for you to come and put a negative, costs. Always put negative. So when you come here, you simply say alt equals. I can see when I said alt equals, is that it has not picked everything. So I need to come and expand this a little bit. Let's expand it up to there. And then you say, okay, this is what we call now net present value, like that. This net present value. Net present value. So maybe you could have gotten 569, another person 567, depending on the number of decimal places you took there. But at least we should be getting something, ladies and gentlemen. We should be getting something, ladies and gentlemen. Is there somebody who has been able to reach where Mwalimu has reached really? Thank you, Cosmo. Great. Thank you, Cosmo is telling me Mwalimu take the cash flows. Thank you, CPA Kendi. Great. Wairimo, my friend. Colleen. All right. Now, we haven't yet answered the question. Austin Kimani, I can see we are together there. Austin Kimani, I can see we are together there. Now, my good students, please listen and listen to me very well. Yeah, so we have the initial outlay. We have been able to answer the first question here. So the first question, very well answered. The first question is very well answered. The first question, the one that has to calculate the net present value for project 6, 3 marks, that is done. So, and the answer we got here, my good students, the answer that we got here is 568. Yeah, Control C. This is the answer that we got. Yeah. So remember, we had this dash for project 6. So you can easily come and paste it. Yeah. Page down. Great. Picking something different, we shall overcome. Let's just copy it down the way we got it. It is 568.5566. Five 68.5566. Like that. All right. So then, gentlemen, then we happen to be having net present values very nicely. So if we say page down here, so they want us to do something nice here to determine the optimum investment combination given the capital constraint. Remember, we have a capital constraint. If we say page up, we have a capital constraint somewhere here. We're told the capital which is available is only 5 million. Is only 5 million. So now, ladies and gentlemen, remember, we are dealing with what we call capital rationing. And whenever you're dealing with capital rationing, there are two ways of doing capital rationing questions. It is either you use linear programming or what we call profitability index. So two things, two methods, linear programming or profitability index. If the capital limitation is only one, like in this case, you've been told that we are only limited up to Kenya shillings 5 million, just one figure, then we shall use profitability index. But remember now there are situations where the limitation is given like in three phases. You'll be told that in year one, the limitation is 5 million. In year two, the limitation is 10 million. In year three, limitation is blah, 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 blah. All right. So now you can see here, the constraints are many. We're being constrained in many places like that. Whenever the constraints are many, then we normally use what we call linear programming. So here we are only limited with one amount, which is what here, which is 5 million. And therefore, I'm going to use what we call profitability index. And then I would want to know, my good students, is there anybody who could be remembering the formula of getting profitability index? Anybody who remembers the formula of getting profitability index? Thank you so much, Javan. Anybody who remembers the formula of getting profitability index? Yeah, total present value all over initial outlay. Present value, yeah, NPV divided by, yeah, whichever. It will end up giving you the same rankings. Whichever method you decide to use there, Susan, thanks, you'll end up getting the same rankings. So in this case here, let's tackle number 2 by first of all, giving these people profitability index. So then if I'm the one doing this question, ladies and gentlemen, this is what I will do. Because I know I'll be ranking this as 1, 2, 3 up to 6. So first of all, I'll come here, inside here. Yeah, I'll be able to introduce P. Like now this becomes P1. This becomes P2. You introduce P's for the projects. So you don't confuse them with ranks. You introduce P's. I've always seen these confusing students. So it is important that you get to introduce P's like that. Then come here and create a column for profitability index. Profitability index. So how do we get this profitability index? It's very easy. The easier one, because I have it already, it's NPV. You take NPV, you divide by initial outlay, like that, because already we have these NPVs. However, you can still convert these NPVs to what? To present values, But why should you do that? You'll end up getting the same ranks. So come here and say equals. So you're taking this net present value. You say divided by the initial outlay. Don't lock anything. You simply come and say Control Enter. And then copy this down here. Yeah, autofill. All the way to the very last one here. Like that. Autofill like that. Yeah, you can come and cut these decimal places to 4. 4 is good. 4 decimal places. Those are good. Like that. Great. So let me know once you, great students of mine, are able to reach there. Let me know once you, great students of mine, are able to reach there. And I hope you're coming to join me for these BDA classes this semester. BDA classes, we shall hit 1,000. 1,000. Courtesy of what year? All of you joining RCM. You know, this is about AFM, it's about AMA. I mean, it's about audit schedules, so many things. You're better off always moving together with the teachers that taught you those other papers because of the format, because of so many things. Yeah. And once you have done that, then come and create a column here where you capture the ranks. And don't forget, ladies and gentlemen, that we happen to be having some mutually exclusive projects. We have them. It is projects 2 and project 4. The two are mutually exclusive. Once you rank one, then the other one can't happen. So when you're ranking, remember the higher the profitability index, the better. So the one that will take up number 1 will be this one with 0.52. So this one here takes up number 1. After that, 0.48 takes up number 2. So this one is project 5, no problem. After that, ladies and gentlemen, 0.48, I can see the next one is 0.45. This one here takes number 3. And remember, this is project number 4. So meaning that project number 2 can never be ranked anywhere because project number 4 and project number 2 are mutually exclusive. So the two can never be ranked anywhere. The two can never be ranked anywhere. So it means that if I've ranked, can never be ranked together. If I've ranked project 3 number 4, it means that this project number 2 can never receive a ranking. Why? Because the examiner told us here that projects 2 and 4 are mutually exclusive. So meaning that it is only one project at a time. It is only one project at a time. So after that, ladies and gentlemen, I'm only left with the 2. So I have this with 0.739, and then I have this one of 0.379. So it means that this takes up number 4. And then now this one here would be number 5. I want to have 6 projects in total because one of them has not been ranked. One of them has not been ranked. One of them has only been ranked. So then in that case, ladies and gentlemen, you'll be able to come and give us here just a small title outside here. Give us ranked projects, how they have been ranked from the beginning. So ranked projects, what do we have here? The one that got rank number 1 is this one here, which is project 3. It got rank number 1. Then, ladies and gentlemen, we have a project number 5. So project 5 got rank 2. Project 5 got rank 2. I can just realign this, no problem. It's just because of how. So the third project is here, which is project number 4. So project 4. From there, we have the 4th project is project 1. Project 1. This is not very well aligned. I'll just come and align it here. And then after that, ladies and gentlemen, we have the very last ranked project, which now is project number 6 here. So we have project number 6 there. Yeah, great. So now give me the initial amounts here. Give me the initial amounts. So project 3 initial amount is the same as initial outlay, is 1125. Yeah. Project 5, the next one, project 5, the initial outlay is 1300. Project 5 is 1300. Great. Project 4 is 1850. 1850. Project 1 is 1,000. Project 6 is 1,500. And I would want to pause there a little bit and see whether we are really all of us together. Let me see whether we are together somehow. Ah, great, great, great. Great. So then, ladies and gentlemen, what I shall do, I will be able to see how much do I need in total. What is the total capital needed? Just like, for example, how you'll go with your son. You go with your son to a supermarket. That time you're walking like this, yeah, that you have a lot of money. Then you have taken things in the trolley, including your own son is on top of the trolley. So you take this trolley to this lady, she's punching the machine like this, and then she gets that you need 60,000. And then doesn't matter from whichever corner, all that you have with yourself there is 40,000. So what I need is 60, what I have is 40. Whether you like it or not, you'll have to return some things back to the shelves. So then, ladies and gentlemen, this is what I want us to do now. Please come here right away and give me the total money required. So say Alt equals. Alt equals is the way to add directly easily. Yeah? Alt equals, and then you enter. So you can see you need 67.75. Yeah, but how much do you have in total? So this is what is needed. Amount required is this. Amount required is that. How about amount available? Amount available. Oh, they are not talking to me. Amount available we were given somewhere here. They told us that the amount that is available, capital available for investment is 5,000. Remember, the figures are in thousands. They're in thousands. So the amount that is available is 5,000. So is there somebody who is able to give me the deficit? Don't even come down here. Give us the deficit. Deficit. Is there anybody who is able to see the deficit? Deficit, ladies and gentlemen, I can see it will be equals here. It will be this amount here minus the 5,000, like that, which gives me 1775 is the deficit. So meaning that this 1775, it has to be acquired. This 1775, it must be. This is what we're returning to the back of the shelves. And as we return these products back the shelf, we can't start returning the first ranked product. No, I start by returning the very least last ranked product. So remember, how much am I supposed to recover from this? From the products I want to recover 1775. So in this case here, recover. Yeah, so like the first, okay, I can delete this, no problem. I can delete this, no problem. So remember, this is the last ranked product. So this one, I must remove the whole of it because you see I want to remove 1775. So I must remove 1,500. When I'm recovering backwards, eh? I'm recovering backwards. So the remainder I can see is 225, 275 actually. I can even calculate the remainder. I can say this minus what I've been able to recover here. So I can see vividly that here I'll be recovering 275. Yeah. So what does that mean? Ladies and gentlemen, that if I come here, I can now come and say amount invested comfortably. Amount invested in each product. Very easy, and I'm finishing this in the next 5 minutes. So amount invested in each product, I will come and pick this cell minus this cell. And then I'll be able to say Control Enter. And then I'll be able to come here and drag this down up to there. So I can see, ladies and gentlemen, that I invested 1125 in project 3. When it came to project 1, I had wanted to invest 1,000, but you see there was the concept of returning back. And remember that this is a project that is divisible. So you're subtracted nicely. I can see project 6, I'm not going to invest at all. So then, ladies and gentlemen, can you kindly go ahead and give me net present value? Net present value. So when I come to net present value, I must be very, very, very bright. You see, for project P3, I have not removed any coin from project P3. Project P3, I have not removed any coin. Please listen and listen to me very well. Project P3, I've invested in everything. So project P3, I'm going to enjoy its NPV in full. So project P3, this P3, the NPV, I'll pick it the way it is here. So when it comes, ladies and gentlemen, to project number 3, NPV, I will simply come and say equals, and I'm going to pick project 3, the 590, the way it is there. That one, I'm enjoying it in full. The same case with project 5. This project 5, I'll say equals, pick the NPV of project 5 the way it is. Because you can see, I've not snatched any coin out of project 5. Exactly like that. The same case with P4. P4, I'm going to say equals, I pick this, is it 590? P4. We. Sorry, I must have mixed up things here. P3 is supposed to be 590. P5 is supposed to be 635. Sorry for that. Escape. So this is supposed to be 635, like that. Yeah. And then we go to P4. So P4, I'm enjoying. P4, ladies and gentlemen, I'm going to pick this 840 P4. Yeah. Then we come to P1, I prorated. So P1, I will come and say equals. I will pick the P1 NPV. But you see now, I will say times the amount that I invested here, which is 725. I divide by the original amount, which was 1,000. All right. So then this one, ladies and gentlemen, I'll be able to get that NPV there. Then, of course, P6, I never invested at all. I expect a 0 there. So now I come here and I say alt equals, I'll be able to get the total NPV coming as 2348. Bold. Allow me to repeat this. I've always seen people, and they're bright people here, coming here and giving us fraction of the investment invested. They come and give us fraction. How do we get the fraction of our investment? They come and say this, the amount invested, all right? And then they say divided by the original amount. They enter, and then they come and drag this down nicely. They drag this down here, like that. This should not have come to 1. That must be something to do with rounding off. No worries. I'll be able to sort that out. Yeah. It was about rounding off. So then we have the fraction there. And then what they'll do, they'll come and put NPVs now in full, the way they are. So if it is P3, we can see P3. The NPV is 590. So they write the 590 the way it is here. 590 the way it is. They come, the next one is P5. P5, they can see it is 635. So they write here 635. enter. They come to the third one. So that third one is P4. P4 is 840. P4 is 840. They enter. And then, ladies and gentlemen, they come to P1. P1 is 390, 390, 390. And then now they come to the very last one, which is P6. P6 is 568, 568, 568.5566, like that. And then now they'll be able to come and give us the new NPV, because now we are investing in form of fractions. So how do we get this new NPV? It's very easy. We are taking this fraction times this net present value, like that. Then they come back here, and then they are able to pull this down. They are able to pull this down like that. And then, of course, now they can come here, and then they say alt equals. Then there we are, 2347.75. So we have the total NPV, and we've been able to answer to the very last. Yeah, because the last one that they wanted us to, ladies and gentlemen, give an answer here is to calculate the resulting net present value from 2 above, to determine the optimal investment combination given the capital constraint. So given the capital constraint, how are we combining these projects? Oh yes, we have already answered that, ladies and gentlemen. This is the optimal project combinations. P1 all the way up to P3 all the way up to P1. P6 we're investing 0, like that. So, ladies and gentlemen, I would want you to create time. This is a past paper question. I would want you to create time, and if possible, repeat this question alone from the very beginning. And you should be able to take less than 30 minutes doing this question. You should be able to take less than 30 minutes. All right. I'm so sure, being the very first session for most of you, may not have really followed like 100%. That is very much expected. There is no harm. But I believe as we get now along, as the rubber meet the road, you guys will be very, very comfortable with BDA. BDA should be one term. BDA shall not be a paper that shall disturb you. It shall be one term. What we need to do is to simply put in the efforts that we're able to put in when we are doing AMA. I know even the other subjects you guys were crazily aggressive, but if there is a paper I rate you number 1, that you did very well in terms of discussions and other things, it is advanced MA. If we come here with that kind of an effort and teamwork, then this BDA will be round 1. Because BDA is becoming crazy every other semester. It needs very, very hardworking students. And of course, a hardworking teacher. And here we are together with you. Our number at RCM is 0793 555 000. We charge 9,000 Kenya shillings. Somebody may ask, Mwalimu, why are you among the most expensive? Of course, it is because of what here. You know, most colleges, they are providing this subject twice a week. As we are teaching you 4 times a week. It is Monday, Tuesday, Wednesday, Thursday. 4 times a week. And you'll even be surprised the other days you're free. There's quite a lot of intervention. This is not like AMA, it's not like AFM, lots of interventions you're going to see happening from the college. So if you don't mind, ladies and gentlemen, I'm an old man. I would want to go and sleep now. I hope you enjoyed the session. I hope you're leaving this very session motivated. I hope there is nobody who is going home demotivated. The big news, 8th of January. 8th of January. 8th of January, 2 days from now, 8th of January, we shall be having our results and we shall be passing. RCM, of course, we don't know what failing is. We are passing and passing and passing and passing. Thank you so much. Have a lovely night. Bye-bye. Bye. Ian, past papers allow me to give them to you tomorrow, if you don't mind, Ian. I hope you're already the paid group, Ian. Allow me to give you those past papers tomorrow, right? All right, Ian. Thank you so much. Okay, sawa. All right. I shared the question. It was shared here, but again, there is no harm. I can share again. Just allow me to share all the past paper questions tomorrow. Allow me to share all the past paper questions tomorrow. Thank you so much. Be blessed big time.